This is something. 353,000 non-farm jobs. I had to seriously double check this, guys. The unemployment rate went down to 3.7%. That's the actual number. We were looking for 3.8%. Let me give you the, I don't even know what to say here, but all right, let's go through this. All right, private sector jobs, 317,000. The street was looking for 155. Government jobs, 36,000. We don't get an estimate on government jobs, but remember last month it was 52,000. Average hourly earnings year over year up 4.5%, 4.5%, and that's more than what we were expecting. We were looking for 4.1%, and then 0.6%. 0.6% is the month to month, and that's also higher than expected. We were looking for a jump of 0.3% on average hourly earnings, and we came in with a jump of 0.6%. A few other things. The labor force participation rate, 62.5%. That's exactly what we had last month. But again, it's the headline. It's the headline numbers here, guys. The fact that you got 353,000 jobs. Thank you, Maria. All right, I'm going to dig into the report here and kind of see where the hiring was, because I have a feeling I know what it's going to say, but let's give you the actual, what the government tells us. Professional and business services saw a gain. Healthcare, retail trade, social assistance. Employment declined, fell in mining, quarrying, oil and gas extraction. That's where we saw the breakdown. So that's the headline numbers, guys. And the market, yeah, Maria, was up. We were up as we were going into this, and we are now down.
Well, the Dow Industrials are down, but the Nasdaq's up 109 right now. But certainly the Dow has reversed course in the face of this. I'm wondering if it's the strength of the jobs numbers or also the wage number here. Stephanie Pomboy, your reaction to this report?
Well, I think you're right to key off the wage number, Maria, because this idea that the Fed is going to pivot and cut rates in March seemed insane on its face before we got this number. I was struck that in addition to not asking the Fed about why they removed the statement about a sound and resilient banking system from their statement, no reporter asked the Fed if everything's so great and the Atlanta Fed is forecasting 4.2% GDP this quarter, why on earth is the Fed contemplating rate cuts at all, much less people, talking about potentially in March? So I think this wage number kind of amplifies that. I would say about this 353 headline number, just underscores the point I made about the wild seasonal adjustments for the month of January. Again, when we flip the calendar from December to January, the economy loses 3.2 million jobs as all those holiday workers disappear. And the ability of the BLS to measure that with any, fine point is ridiculous. And I think this number will be revised lower. But again, no one will pay attention to that other than us here on Fox Business.
You ready for the revisions?
Yes, sure.
This is going to get everybody's attention for December. They revised December to 333,000. The initial number we got for December was 216,000. That's the revision for the month of December. That's just incredible. I don't even know what to say about these revisions.
I think the revisions, but more importantly, the wage number is really something that this market is focused on. But Charles Payne, weigh in here. Your thoughts?
It's we go back to that sort of Powell presser, and you always wonder what he knows and what he sees has access to before ahead of time. Obviously, this is the reason we're giving a lot of equity gains up is because now this sort of takes the Fed out of play. And I think Wall Street has more confidence in the Fed being accommodative than the fact that we may have a strong economy. If you had to have either one, I think ideally you want a strong economy to be the sort of buttress for a strong stock market. But I don't know that there's a lot of confidence in that. And the Street would have rather seen a lower number, infuse the idea that maybe March is still in play, despite what Powell said. And it's one of these things that you got to comb through. Listen, I'm always focused on how many people came into the labor force. I see the participation hasn't changed, so it's going to be some interesting details to go through.
Well, we want to go through those details right now. Julia, what strikes you here?
Well, it looks like the labor market is accelerating, not cooling, and that is inconsistent with a whole lot of other economic data that we've received recently. The JOLTS report showed a big decline in job openings over the year. It showed a big drop in hiring in the last 2 months of the year. This is really remarkable, a big surprise to markets and to economists who are following the labor market.
The next question is, what does the Fed do about it, Stephanie?
Yeah, well, I mean, again, I think that it's insane that they're even contemplating rate cuts in the face of this data. I would point out, though, the household survey was down again in this number. After being down 687,000 in December, it declined 31,000 this month. So not as dramatically, but still, you have a yawning gap between what the payroll survey is saying, what the household survey is saying. So maybe that's something that the Fed is focused on, and maybe that's why they're kind of tilting dovish. But this report, I think, really blows a hole through this idea that they're going to pivot anytime soon, to say nothing of, the math on inflation, which the CPI numbers will hit their low in February, and then they start to skew higher year on year after that. So the Fed has a very narrow window, if it's going to cut rates, before the inflation data start to act as a headwind.
Steve Moore, look at what Treasury yields are doing right now. We've gone from down to up on the 10-year, and we're talking about a pretty big move on the heels of these numbers. Assess the report.
This is
10-year
so
up
amazing.
9 basis points right now, Steve. Steve, the 10-year's up 9 basis points. The 2 years up 11.5 basis points.
So this is at least the third or fourth or fifth month where we've seen this huge discrepancy between what the payroll survey is telling us and the household survey is telling us. That if those numbers are right, that you're talking about almost 400,000 discrepancy between these two, and that's been going on for a long time. I don't understand that. I don't understand how you can continue to have one report saying it's a good employment situation and another report saying that it's not a very good one. The other thing that I would add to this is, there is no reason right now the Fed should be lowering rates. If you look at, we talk about the economy doing well, but the other point is, look at what's happening to, for example, commodity prices over just since the beginning of December. Commodity prices are up 7%. And that's a lead indicator that we have not solved the inflation problem. So I think it would be a big mistake right now for the Fed to be lowering rates.
Yeah. Well, look, he took it off the table in March. If he doesn't do it in June, it's going to be all political, and people are going to say he's getting political. That's, of course, what President Trump told me in my exclusive interview, that he thinks the Fed is going to get political and cut rates to help Joe Biden.